Welcome to the Capital Spreads Weekly Update. Today is Monday the 22nd of October 2012. We've got off to what was a relatively negative start for the FTSE and other European indices. We just seem to have bounced off our lows following that big decline on Friday from the Dow, over 200-point loss, taking it to around the support level of 13,350, 13,300, and just seeing maybe a little bit of a bounce there. The futures for the Dow just looking slightly positive, so we may see a few buyers creep back in at these levels, but the FTSE at the moment is bang on 5900. The Dow, as mentioned, 13,350. The euro dollar is just seeing a little bounce at 130.50. Cable at 160.40. Gold, which has suffered quite a bit in the last couple of weeks, is down at 17.23, and Brent still around that 110 mark. It's at 110.60. And so the day and the week got off to a negative start, as mentioned. That's primarily down to some poor Japanese numbers, their trade balance there showing that they could possibly dip back into a recession. So not the best of starts of the week, but that's really it for today. Very, very quiet day on the economic data front. Tomorrow, for the rest of the week, really, there's a lot to focus on. Tomorrow, we get French business confidence figures, and there we'll see just how business is feeling about the recent budget in France, which of course has been very austere, lots of tax hikes. But also, so to the downside, there might be a little bit of negativity around the French business sentiment and expectations. But of course, recent PMIs have been quite strong. So all in all, expectations probably going to remain roughly flat there. Also, tomorrow we get Canadian numbers as well. There's retail sales, which are expected to fall, and also we get the Canadian rate interest rate decision, and that is probably going to remain the same. But the general consensus is that for a bank that has been quite hawkish of recent, they're probably going to be a little bit more dovish in their tone. We also get European consumer confidence as well. On Wednesday, there's a lot of PMI data. So there's manufacturing and services data from Germany and the Eurozone. Germany, things just slightly meant to improve as they are in the Eurozone. So there have been, over the past few weeks, sort of tentative signs that things just turning around in the Eurozone. So we'll keep an eye to see whether, in particular, Germany's services data can get back above the expansion number of 50. There's also new home sales from the US, and then in the evening there's the FOMC rate decision. Not expecting anything there really, no, and there shouldn't be any additional easing. There might be a bit of tinkering with Operation Twist, but it would seem that for the time being, central banks have done, mentioned their major measures. In particular, obviously, last time we saw the Federal Reserve make an explosive move, causing a bit of a risk-on move for the markets. So I'm not expecting much from the FOMC this Wednesday. Then on Thursday, probably a focus for the week is UK GDP numbers. Now, the consensus here is that we have recovered from our triple dip recession. 2 quarters, of course. 2 quarters now we've had of negative growth following that first dip, deep recession following the banking crisis. So we're finally expected to see growth and a recovery from the Jubilee, the extra bank holiday, and assistance from the Olympics. Now, those first readings of recent have always come in slightly worse than expected, but the consensus is 0.6% growth for Q3. We'll see whether that is actually the case. So Thursday will be a focus for UK GDP. Also from the US on Thursday, there's the pending home sales numbers as well. And then we finish off the week with consumer confidence numbers from Germany and France on Friday, as well as the US giving us their GDP numbers for Q3. And again, they're expected to show a rise from Q2. So market expecting 1.8% GDP growth for the US. So very much a focus on the macro picture this week. Lots of economic data, in particular a focus on GDP numbers. That's it as ever. Do give us feedback, media@capitalspreads.com.